Hello and welcome to Got Stocks. Today is April 19th, 2024. It's a Friday. The market got smoked today. Well, at least the tech sector did. So we're going to look at the Dow Jones, we're going to look at the NASDAQ, and we're going to look at the S&P 500. And we're going to see what kind of damage was done today in the market and what we need to do to navigate going forward. We were anticipating for the correction. Here it is. So now we need to reevaluate all the technical analysis in the past. We have to put the brakes on that and reevaluate everything with the damage that was done today. So we are currently looking at the Dow Jones Industrial Average. So if we look at this area right here on this particular day, this reached a low of 32,327 that was established in October 27th of 2023. And then the 52-week high was established March 21st, 2024 at 39,889. And then we went into a retracement from that point. This is a 5-month bull rally. We had a little bit of a correction through this area right here. So this is going to give us a level of support. As you can see, as the market is retracing, it's starting to hit this area. It's holding strong right now. If it can hold this area, this will be a good thing. If it breaks it, then the next level is going to be 37,122 range, or we can even come down to the 50-day. Now, these numbers change every day. All the information is time sensitive. It needs to be reevaluated essentially every day. But this is to give you some benchmarks to see what's going on and what kind of structure the market has. Now, this is the Dow Jones Industrial Average. Now we are looking at the NASDAQ 100 index. As you can see, this thing got smoked today. Pull up the Q. This is what's concerning with this, is this volume spike has picked up. A lot of sellers came in. We've broken the 10-day, the 21-day, and the 50-day moving average. So the white line is the 10-day moving average, the purple line is the 21-day moving average, the green line is the 50-day, and then the red line is the 200-day. 100 index has broken all of its moving averages, and it's broken all of its support areas, and it is heading towards the 200-day moving average. So what do we need to do to protect ourselves? We always talk about manage your risk. Manage your risk. If you are trading this market, if you're buying and selling and you're trading trends and swing trading, channel trading, gap trading, moving average trading, if you're trading on a regular basis, then all the technical analysis is really very, very important. And to put your stops in, you have to have your stops placed. So when the market sells off, you get stopped out and you protect your portfolio. So our 52-week low in the Qs is 309.89 and the 52-week high is 449. We've had a nice little run for the past 52 weeks. You had a retracement area through here. This was painful. This is 3 months of pain in a downward draft. But what did it do? It came down and it touched the 200-day moving average and off to the races again. So where are we at now? Here we are. Here's the 200-day. This was once resistance back in this area, has now turned into support. And so that's where the market came to. It filled this gap from this area. If it does not hold this area, it's definitely going to go to the 200-day moving average, and then we'll have to reevaluate. So all this information is time sensitive. And the reason why you want to use the moving averages, the 10, the 21, the 50, the 200-day moving average, is because if we look at facts of how it's held and respected its moving averages, that's going to give us determination of how valuable it is. Through this whole range here, the Qs have respected 10-day, broke occasionally, but it's respected the 10 and the 21-day all the way up here. Broke it a couple of times, but got back into the range. But now look at it through this area here. It's trading below the 10, 21, 50, and it's in la-la land. P for patience. We need to manage our portfolios and we need to respect what's going on in the market right now. S&P 500 index. essentially what we're looking at is a nice run. October 27th, 2023, we hit a low of 41.03, and from that point, we've been in an extreme bullish phase. It topped out. Our 52-week high is 52.6485, but we had a major downdraft April 4th. This was our first indication that there's trouble in paradise. Hopefully you've been managing your risk, you put your stops in, and this is why it's very important to have setups. You need to have a trading plan. You need to have your entry points, your exit points. You manage your risk, you put your trade in, and then you want to manage it by having a stop order in. If you get stopped out, you can always get back in. But if you don't, when this market does a correction, usually it will wipe out in several days what it's taken months to build. This was our day that let us know that the correction is happening. This is a engulfing. It closed below the 10 and the 21-day moving average. We're going to look at the SPY. This is the Spider's Trust for the S&P 500. This way we can follow some of the volume patterns. We're going to zoom in on this level right here. April 4th, this was a complete sell-off the entire day. This whole balance range through here, it broke it. It closed below the 10 and the 21-day moving average. If you look through the past several months, it's traded to its 10-day, breached it here, touched the 21-day moving average, and it's respected the 10-day and the 21-day moving average for several months. So it breaches the 10 and the 21 and closes below it. If you look down here at the volume, as you can see, the volume levels are picking up. Look at the volume, the selling volume pressure versus the buying through this whole area. You can see the volume has been giving us the indications that the correction is going to happen, and it is starting to happen, and it started right here, gave us a little hope the following day, and went into a consolidation period. It breached it here, and then we had a major sell-off on Friday. The S&P 500 is trading below the 10, the 21, and the 50-day moving average. We have a level of support in the range of 491.32. So it's pretty close to that. Let's see if it holds. We have a little bit of support at 479. This is the SPY. As you can see, we have a balance range in this area. That's going to give us a stronger level of support. When you see these days where it just keeps edging up, you're not going to have a whole lot of support in those areas. It's when the consolidation periods happen, you'll notice that's where your support area is just going to give you a better probability of it holding. There are no guarantees in the stock market. What technical analysis is going to help you with, when you're managing your risk, you have your stops in, you plan your trades, you plan your setups. Nothing's guaranteed in the stock market. So it's going to increase the percentages of possibilities. That's going to increase your profitability. Manage your risk, dot your I's, cross your T's, and don't forget the Z. Have a great day.